Good afternoon and welcome to another Market Matters video update. Today is Friday the 11th of October. We're into Q4 of 2019, if you can believe it. Today, James and I are going to have a chat about markets, where we're positioned heading into the last few months of the year. Bit of volatility around at the moment, James. You saw a few 100-point moves last week, a couple of 50-point moves at the moment as well. What's your take on all that?
Yeah, it's been an interesting period in markets. I guess it's always interesting in markets. We had a pretty decent 250-point correction in the ASX 200. We've now bounced a little bit from those lows. I think this volatility will continue. Ultimately, I think the market goes lower from here. I think our ideal target on the downside is around the 6,300 mark, and that's sort of what we're positioned for at the moment. Obviously, Trump, China. Trade talks going on at the moment. The market's whipsawing around on the back of headlines that are coming from these trade talks. So, look, I'm a little bit. It's sort of in no man's land at the moment. A little bit, we've had this route. We're sort of consolidating around the 6,600 level. I think it goes lower into the 6,300 level, and then if it does, we'll be tweaking our portfolios on the back of that. So right now we're in a bit of a holding pattern, so it's a little bit boring at the moment this week, Harry.
Certainly. So how does that holding pattern that you mentioned play into your positioning in the portfolios at the moment?
Yeah, so if I concentrate on the Market Matters Platinum portfolio, which is sort of our flagship portfolio, we have, we're pretty well invested in stocks. We're holding about 18% or thereabouts in cash. We've got gold positioned in the portfolio, so we're holding 6% in gold across Newcrest and Evolution Mining, and then we've got a leveraged short position on the market. So I guess we're comfortable with the stocks we have on one hand. We're then putting a couple of hedges in place by being long gold and long a negative facing ETF. So if volatility kicks up next week and that supports those gold positions, we'll be probably tipping out of those gold positions from the portfolio. That'll free up a bit more cash to buy into this market weakness. So right now I'm really comfortable with how the portfolios are positioned. We've been outperforming the market this financial year to date, building on a pretty good performance last year. So I'm comfortable for now, Harry.
Certainly. So there's a lot of flexibility in the portfolio. That doesn't mean there aren't stocks to invest in. A few of the names that we hold that you are finding interesting at the moment. What's your rundown?
Yeah, a couple that have caught my eye in the last few weeks that we hold, as I made mention of. So the gold positions. If gold does spike up in the next week or two, then I'll be a seller of gold into that spike. Equally so, if the market does pull back, then we'll liquidate our BBOZ position. That'll free up some more cash. In specific stocks, I like the look of Orica at this current point in time. We're up about 30% on that position, but I think it goes another 10 or 15% higher. Tabcorp has started to trade up to the top of its range. We're only around 8-9% up on that position, but it is back at the top of its range. So, if we get market volatility, Tabcorp loves a bit of market volatility. You might see that push up and go and make a marginal new high, at which point we'd be sellers of that stock. Elsewhere in the portfolio, we've got a few of these valuation plays. Pact Group has got some positive momentum today coming out of the back of Aurora, the sale of a part of their business for a really good price yesterday. So I think Pact Group is, we've had a few false starts on that position, but that's starting to look good. It's up 4% on the market today. So look, as I said before, I'm comfortable with our portfolio positioning, but there are a few tweaks that we will be making in the next week or two.
Certainly. You made mention of the 18% cash balance. That means we've got a few bullets in the chamber to pull if this market does come back like we're planning. What would you be looking at to pick up into any pullback here?
Yeah, I wrote an article this morning just looking at sectors in the market. So we start pretty much top down, and we've drilled into a couple of sectors. So resources, I think, are really interesting here. So if you think about what's happening from a macro standpoint, obviously globally central banks are lowering interest rates. That's there to support a pretty difficult economic situation at the moment. Ultimately, I don't think that'll prove to be enough. I think there will be further stimulus from central banks around the world, and I think that will be what's needed to to support global growth. In that sort of environment, so if I get my crystal ball out and look in the next couple of weeks, if we do see a market correction back around the 6,300, then I'll be focusing heavily on the resources space. So right now we've got a position in Fortescue, which is up sort of 20%. We've got positions in BHP and Rio. I'm a likely buyer of Western Areas below $3. I like the look of Oz Minerals at around that 9 level. So I think resources are going to be an area of focus for us into any market correction. So sort of going away from that, I've written a bit about growth versus value, so cyclical value. So I think the resources are representing that cyclical value that we can go in there and pick up in the weakness, Harry.
All right, that's all for now. Thanks for joining us. Thanks for joining us, James.
Thanks, Harry.